you for arranging the speakers to Dr. Professor Chul Paharom for always continuing support to get the speakers, and also to Nikhil Kamat, the president of Indian Alumni Association, who is not yet joined us, but he is the one who contact Jinesh. And thank you for Mike Siabin Makatakai, who will be our moderator this afternoon. Let me introduce him. Mike is an EMBA graduate 2006. He is the founder and CEO of 1A Teams Consultants Pte Ltd in Singapore. He is the Secretary General and Treasurer of Federation of AIM Alumni. He is also the President of Philippine AIM Alumni Association. So now let's start the webinar, and the time is yours. Please, Mike, be a moderator. Thank you.
Thank you very much, Vice Chair Dr. Kartika Antonio, for that great introduction. So again, ladies and gentlemen, good afternoon. And of course, we welcome our fellow AIM alumni leaders, friends of AIM, and of course, our friends from the different organizations. We are also expecting to join our event later, some of our friends from the different organizations. So this afternoon, we are very privileged to have two esteemed guest speakers who will talk about the topic, which is very important, timely, and relevant: currency alternatives to address global movement of non-traditional financial system. So we are privileged to have here two great speakers. So without much further ado, I'd like to introduce our first speaker. Our first guest esteemed speaker is Mr. Jinesh. He is the founder of the Ahimsa Capital, currently managing crypto portfolio for HNI clients. And he is also an investment and management consultant for Costco Capital, part of Elite General Manager Development Program of Globe Telecom Philippines. He co-founded SNV Associates, which is a real estate valuation advisory firm. He was a former branch manager and regional real estate valuation head at HDFC Limited, a software engineer at Infosys Technology. Of course, he has an MBA, Master of Business Administration, major in finance at our Asian Institute of Management, as an ADB JSP scholar. He is a CFA charter candidate and a Bachelor of Engineering at Nirma Institute of Technology in Ahmedabad, India. And of course, he has entrepreneurial professional experience for more than 15 years. So ladies and gentlemen, it's an honor and pride to give you my fellow AIM alumni leader, Mr. Jinesh Shah. Jinesh?
Thank you, Mike, for a very nice and generous. Hello.
Yes, please go ahead, Jinesh.
Yeah. Thank you, Mike, for a generous introduction, and the background behind you of AIM gives me a goosebumps. I was there just 4 years before, in 2019. So yeah, I will get started on the presentation. Let me just share the screen. Okay, is the screen visible? Presentation visible?
Not yet. Not yet. We're still waiting. I hope it pops up. Yeah, it's there. We can see it.
Okay. Okay, so currency and payment rail alternatives. Disclaimer, whatever is presented in this talk is just for academic and knowledge transfer reason. Nothing said is to be considered as a finance or investment advice. And yeah, most of the discussion will focus on the history of money, crypto industry, and decentralized finance. So to get started, the famous quote by Henry Kissinger: "Whoever controls the money controls the world." This is the history of global reserve currency since 1940. Uh, there used to be currently its global reserve is dollar. It used to be British pound. Before that, it used to be French currency, then Deutsch currency, Spanish currency. But most of these currencies have ended between a period of 80 to 100 years. And even for US, it's almost 100 years since it has been a global reserve currency. This has been overall evolution of money. It started with salt and shells, and right now we are at paper currency and credit cards, and we are moving into a digital currency, which could be Bitcoin and few other things as well. Use of money, as discussed, the primary use of money is store of value, medium of exchange, and unit of account. In digital world, there are secondary uses, which is privacy, permissionless, and censorship resistant. None of the currency right now satisfies all the 6 or even all the 3 primary uses. So for example, no government fiat has right now feature of store of value. All government currency, whether it's Swiss franc or whether it's US dollar, they depreciate over a time. And gold, again, if considered as a money, is a store of value, but it is not being used as a medium of exchange. So what is money? According to JP Morgan, gold is money, everything else is credit. He said this thing in 1912, almost 100 years back. And even the Professor Perry Mehrling, he came up with something called inherent hierarchy of money, which puts gold at the top of the pyramid, and everything else, whether it's a currency, whether it's deposits, whether it's securities, they are all form of credit. So to summarize, money is something which is not a liability of anyone, whereas currency is a liability of someone. So money has zero, gold has zero counterparty risk. It is not a liability of anyone. Whereas currency, any government fiat currency is a liability of central bank of that country. So there are two different views on money. There is an Austrian point of view, and then there is a Keynesian point of view. According to Austrian point of view, money is not an invention of a state. Money is something which is bottom up. Money is something which is created by people, and then state uses the money for the purpose. Then there is a Keynesian viewpoint which says fiat money is a money backed by men with the guns. And even Keynes went as forward as saying that gold standard is already a barbarous relic. There is a very hybrid view by Dr. Ambedkar, who wrote the Constitution of India. In his 1923 paper on the problem of rupee, he kind of merged the Austrian as well as the Keynesian point of view. He said that it would be better to have a fixed limited issue of currency of a rupee that is issued by government. So this is very similar to a Bitcoiner point of view, that Bitcoin is limited or fixed in the number of issues. Back in 1923, 100 years before, there was no computer or there was no internet. So it made very much sense that whatever the fixed limit of issues of currency is issued by a government or a central bank. But today, with technology, with internet, with computer, we don't have to rely on humans or governments or bureaucrats to issue a money. So solution to Keynesian coercion, man with a gun problem. So Friedrich Hayek, another Austrian economist, he said that it is very difficult to take money out of the hands of the government. It can only be taken by a sly roundabout manner and introduce something which behaves as a non-government money, which cannot be debased. Again, he said this thing before the invention of internet or a cryptography or a blockchain. And And then in 2008, cyberpunk and engineer came up with a system which did not relied on a trusted third party, or which was peer to peer, and could survive the government's attack the very way decentralized network like Tor or Nutel are surviving. So money is equal to community. Internet allows to form borderless communities. Cryptography helps protection against government's violence or government interference. And then internet plus cryptography helps us to give money without government. Consequences of current wars. So this is there is a very famous quote by a French economist: when goods don't cross borders, soldiers and viruses will cross borders. Uh, so when the first deglobalization slump happened, that's when the World War II started. That is somewhere around 1929, 1930. And right now we are at the second deglobalization slump. Once this deglobalization slump will end, all the current problems, all the trade wars and all the wars in Europe and Russia we are facing will see an end to it. So another consequences of currency war is this is like the kind of purchasing power destruction that has happened because of the competitive currency war. So right now, last 10, 15 years, each country is engaged in depreciating their currency. So a lot of middle classes and people in the bottom 90% have faced purchasing power destruction across the globe. Another consequences of currency imperialism is that Fed prints the money, but everyone else pays the price for it in terms of inflation, in terms of a global inflation. So Fed printed around 40% of the dollars in the last 2 years, and we see that oil prices has almost doubled from since then. Consequences of financial repression. This is from an IMF paper which says that because of cash, central banks cannot go into a deep negative interest rate. So cash, gold, and now even the cryptocurrency like Bitcoin helps or prevents central banks going into a deep negative interest rate territory. Another consequences of currency imperialism is what we saw in Afghanistan and Russia. US government Fed took out the dollar reserves of Afghan central bank, which led to around 13,000 Afghan newborns being died of malnutrition. This happened because they cut off Afghanistan from their dollar reserves as well as from the SWIFT. So Afghanistan people had to rely on informal money networks to get the supplies, to fund those supplies and rest of the things. And now we are seeing the same thing with Russia. Again, both have different plus rights and wrongs, but these are the implications of having a currency and payment rail imperialism. So what is the solution to currency and money imperialism, or a coercion, a man with a gun problem? So one aspect, as mentioned by even Dr. Ambedkar, was separation of money and state, and even the other is to end the monopoly of currency with the government. Bitcoin has already done that. Bitcoin already ended the government's monopoly on a currency, and now we have almost 10,000 different options or competitions to that. So we have moved from in God we trust, gold, to in government we trust, which is fiat, to now in algorithm we trust. So Bitcoin is an ungovernable governor of global governments. The way gold used to be an ungovernable governor of the kings, whether it was Genghis Khan or Ashoka or Alexander, they had to play by the rules of the gold. The same is happening with Bitcoin. Whether it's Putin or whether it's Erdogan or whether it's Xi or whether it's with Biden, no one has such banned Bitcoin. until now. So all of them are playing by the rules set by the cryptography and the Bitcoin. So there are two different architectures. One is called TTP, which is trusted third party or credit based, and the other is P2P, peer-to-peer, self-custody, and non-credit based. So P2P is cash, gold, and the Bitcoin, where men can record a transaction or ownership of an object, that is through a trusted third party physical or digital ledger or database, and another is cryptocurrency. There is no third invention. You can only record ownership of an object, whether it's a money, whether it's a property, whether it's a stock, only in two ways: either through a database of a trusted third party, whether it's a government, whether it's a Demetri service provider, or whether it's a private bank. That those are the trusted third parties, and they control the ledger, and they record the ownership of whether it's a money or whether it's a stock or whether it's bonds or whatever. And the another option available now is cryptocurrency blockchain. So if you see all the banking system and the payment rail, they work on a credit system. So hence there is always a T plus days of settlement, whether you use credit card or whether you use the most advanced form of internet banking, which is in India, where there is an almost instant settlement, but all of them use a credit-based model. There is a huge infrastructure of a clearing and a settlement house, which performs a heavy lifting behind the screen. But when you do a cash transfer, cash to cash, peer to peer payment, or when you do a transaction with a gold, there is no settlement or a clearing house needed. Heavy lifting of a clearing and settlement house needed. But cash and gold cannot work in a digital world, and the economy is moving more and more towards the digital world. Bitcoin solved that problem. Bitcoin was a first peer-to-peer currency which did not need a trusted third party. It doesn't need settlement and clearing houses. Even in US right now, if you try to do a intra-bank transaction, it takes T plus 2 or T plus 3 days, even with an automated clearing houses. But with Bitcoin or any cryptocurrency, you can instantly send a transaction within 10 minutes, within 30 minutes, across globe, across any part of the world. So again, the limitation of this credit-based system is that it prevents creating 100% financial inclusion. There are 11 million people in US who doesn't have bank account, which is almost 5% of the population. I'm sure in Philippines, Indonesia, India, there will be many more people who doesn't have a bank account just because of this architecture. If I would compare it with the civil engineering world, then this is like load bearing structure versus a framed structure. You can't build 50-story building on a load bearing structure. You need a new innovation like a frame structure to build 30-story, 50-story building. In India, which is a digital transaction, did around $200 billion per month, somewhere in October 2021, which was the peak. During the same month, Bitcoin on its layer 1 performed transactions of around $1 trillion. UPI is a permissioned network, and it's domestic. It's within the India and maybe just to an Indian subcontinent, with Nepal joining the network. But Bitcoin is permissionless and it's global from day one. So yeah, Again, the public lightning network is also seeing a huge increase in capacity. Public lightning network is a layer 2 solution of a Bitcoin, which is much faster and much efficient. Just to compare, Visa performs 24,000 transactions per second, whereas Lightning has a capacity of 40 million transactions per second, which is almost 1,500 times bigger than Visa. So this is the difference between the traditional payment rails, which is Visa and PayPal, compared to the crypto payment rails, which is Lightning and Solana. Uh, the use case of a stable coin, there have been a lot of stable coins like USDT, USDC, DAI, and all of them are of different varieties, and they have been growing. Right now, the outstanding stable coin supply is somewhere around $100 billion. And stable coin have been a good alternative to people in highly inflationary countries like Nigeria, where they can't access dollar denominated accounts, or even if they access, they don't know when government will convert their dollars into local currency. Uh, there are other keen Asian economists like Nouriel who are planning to come up with their own version of stable coins, which might be AMC KYC, AML KYC compliant with an ESG feature. Even UK Treasury is thinking that maybe stable coins are better than CBDCs. So yeah, even governments are trying to use this cryptography and blockchain technology. Uh, this is what how the communication looked when there was only post office and when there was a monopoly of a post office. But when we shifted to a digital world, right now my mobile has at least 3 to 5 messengers. So I use WhatsApp, Telegram, email, SMS, Facebook Messenger, Signal, Discord, Telegram. So from just using a single system, we have moved to around using multiple systems, multiple communication systems. Same will happen with money, because money is becoming digital. Previously, money was physical and it was monopoly. Now, money is digital and there is a free market competition. Now, my mobile will hold open source money like Bitcoin and Ethereum. It will hold private money like Facebook was planning to come up with a Libra, or even if they don't come up, there are already another private versions like USDC and USDT. And then there will always be government currencies on your mobile as well. So this is how the future of finance is moving. Initially, we trusted a person. Most of the lending and borrowing transaction used to happen with a person in a village or a person in a town. Then we started trusting organizations. That's how the JP Morgans, BPI, and HDFCs and those banks and institutions came up. Instead of trusting a person, we started trusting an organization and institutions. Now we are moving into an age where we don't trust institutions, we trust algorithm. This is already happening since last 20 years with 8 or more than 20 years with ATM. We trust ATM more than the human cashier. And whenever we have upgraded our trust, we have seen the efficiency in the capital, in the productivity, and everything else. So this is something, a very unique use case of crypto, which happened during last 2 years during COVID and post COVID. One of the founder in India, over a weekend, out getting frustrated with the COVID, he posted that he wants to do something, and he posted an Ethereum address over a weekend. And uh, Ethereum founder sitting in Canada, he donated $1 billion worth of Shiba Inu, which is a Dogecoin, meme coin, and few other assets. That cannot happen with traditional banking. To open a bank account over a weekend and to get a funding of $1 billion without any permission is next to impossible. Uh, yeah, because even the Swift wire transfer will take T plus 2 or T plus 3 days. Uh, Then this $1 billion was kind of liquidated by market makers over a period of 6 months to 1 year. And out of that $1 billion, $500 million was realized in actual US dollars. And which is, I think, one of the biggest private COVID donation in India and maybe in the most part of the world, other than the top billionaires. Recently, Ukraine government posted Bitcoin and Ethereum addresses to raise funding for the war. This is something very interesting. We have heard about the war bonds, but this is like a war crypto. And people donated around 100 or $150 million of Bitcoin and Ethereum to Ukraine government. So again, this is something which is very difficult to do with a traditional banking system.
Oh my God.
So again, economy has been moving from a physical Silk Road to a digital Silk Road. Next economy, the biggest economy will not be the Chinese economy, it will be the cyber economy, and it is happening. FANG used to be bigger than IBM and Microsoft. Right now, Bitcoin and Ethereum are already bigger than a lot of traditional banks, JP Morgan and Goldman Sachs. Same happened. IBM and Microsoft and FANG became bigger than GE, General Electric, which was one of. So as you see, things have been moving from agriculture to industry, from Web 1, Web 2 to now Web 3. Yeah, that's it. Disclaimer: everything said here is just for knowledge transfer, and nothing is a finance or investment advice. Thank you.
Thank you very much, Jinesh, for that very insightful and valuable sharing of information. I'm sure a lot of us will be asking questions later. So we'll have Jinesh back later at the question and answer portion. Again, we would like to acknowledge and, of course, welcome our AIM fellow AIM alumni leaders, the friends of AIM and the community. Of course, we have here, I can see fellow Rotarians, no, especially from my Rotary Club of Makati McKinley. And also I have friends here from our Israel Chamber of Commerce of the Philippines. So thank you very much for joining us.